brokers, accountants, and lawyers who seek to demystify the somewhat confusing world of international tax. We do these live streams, at least we try to do these live streams every week, but regardless, we do produce content daily that's published on our social media, YouTube, LinkedIn, Facebook, and basically wherever you get your podcast. Now, sorry, I'm just waiting for, okay, yeah, everything is on. So you were invited to submit questions. So if there are any questions that you wanted to touch on, any issues that you wanted to discuss or touch on, please feel free to type them in the box below. I know some of you did send them by email. If you sent it, yes, we've seen it, we have it. But time permitting, it is not too late to type in the box below. Of course, since we are licensed tax advisors, we are not yet your licensed tax advisor. So please keep in mind that nothing we say here should be construed as advice. We're having a general conversation about what I hope would be considered important tax principles that you guys as remote workers, as nomads, need to keep in mind as you make your way across the world, I guess. So I'm just waiting on, yes, Facebook is up. Okay, fantastic. Great. This is being recorded, so for those who cannot stay for the entire hour duration, please, yes, to answer your question, yes, it will be available. But basically, wherever you get your favorite podcasts will be available, including on our website. On our website, we have over 2,000 articles on international tax matters, as well as over 1,000 videos on YouTube and various podcasting platforms. Every day we publish on like 23, 24 podcasting platforms. So yeah. Okay, right. So I think that's it from an administrative point of view. So let's jump into the questions. And again, if you haven't given it in advance, feel free to type in the box below and we get to them in the order in which we receive them. So let's start talking about, okay, somebody wants to talk about Portugal. Yes, for those who have the privilege and the opportunity to work remotely, Portugal is an increasingly popular jurisdiction. And we get dozens of inquiries daily, and Portugal, Dubai, and of course Singapore, which is where we're based, have to be the top three. So, but let's talk about Portugal. Someone is asking about whether they can run an LLC from Portugal tax-free under the NHR, which is called the NHR stands for the Non-Habitual Residence Program. Now, it's kind of contentious in that I know there are different advisors saying different things. Let's first of all start off by what an LLC is. So an LLC is a unique creature in law, and that's a hybrid entity. So it does provide limited liability protection. So that's what it was designed to provide, limited liability protection. But it typically, if let's say that you're based in the US, it typically won't confer any special tax benefit. So it's not really, at its heart, it's not really a tax play, but it's all about limited liability or protection. Because otherwise, without the benefits of limited liability protection, should there be some sort of dispute with a customer, with a client, a supplier, whatever the case may be, you would be laid bare. So they can come after you for your personal assets as well. So that's why it's super important that I tell clients all the time, the last thing you want to do is anything in your own name. You want to use an entity. Okay. Now, the LLC, from a tax point of view, it's transparent. So in other jurisdictions, the closest comparison would be a partnership if there's more than one of you, or a sole proprietorship or sole trader if there's just one person. So that's essentially what an LLC is. Now we've discussed what it is, at least within the US context. So if you are living and if you do move to Portugal and you spend time and you become tax resident there, I know there are some advisors, there's some conversation about whether under the NHR it can be enjoyed, the income derived from the LLC can be enjoyed tax-free. Now, under the NHR, It does allow for foreign derived dividends to be received into Portugal tax-free under the non-habitual residence program. But remember, well, not remember, with an LLC, because it's transparent, it doesn't technically give you any dividends. So there are no dividends with an LLC, they're distributions, which may seem, it's more than just terminology. This has a different definition in law. So that this is something that needs to be really kept in mind. So that's the first thing. So then the question is, okay, well, therefore, how are these distributions treated? Well, the NHR was designed, when it was designed, it was contemplated that the benefit will be given to foreign derived dividends, and a distribution technically is not always a dividend. It may be under certain circumstances, it can be interpreted as such, but you can't just assume that anything that comes from an LLC can be treated like a dividend in Portugal. It probably depends on the facts and circumstances. So, having said all of that, is it possible? Generally speaking, no, because for most people, they are single members, what we call a single member LLC. So they are the real person who is running the entity. And once they decide to run that entity from Portugal, one of the tests in international tax and determining where an activity is to be taxed or where entities to be taxed, one of the tests is around management and control. So that entity, even though it's a limited liability company, management and control, if it's being exercised from Portugal, it becomes taxable to Portugal. So so essentially be treated as business profit. So, or some people treat it as capital distributions or capital gains, and therefore tax it at 28%. And some people treat it as business and it's taxed at 20%. Regardless of how it's interpreted, it will really not be subject to zero tax, because I see this is what in some discussion forums, that's what is being positioned as. There's this incredibly smart way of moving to Portugal and enjoying zero tax. Well, unless you're a US person, when you're going to be paying tax anyway. So just to make it clear, it will not be subject to zero tax. And if you have a look at our website, I think I mentioned our website has over 2,000 articles that are just there, free content. And you do a search, you go to articles and you do a search for treatment of US LLCs in Portugal. I repeat, treatment of US LLCs in Portugal. It's important because it makes, in that article that I wrote, I made reference to a specific case that was not tried, but it was it was decided in Portugal. This is back in 2017, so in December 2017, and the facts of the case, I have it both in Portuguese and in English, so it was considered, and the decision of of that particular court is that no, it is no way, it would not be tax free, so it would be subject to tax in Portugal. So have a look at it, but the bottom line is that I know that there's a lot of discussion and a lot of heated discussion from what I hear, but the authorities in Portugal have made a determination, and well, anybody who really understands the nuances of international tax law would have seen it as pretty obvious. It's not going to be subject to, it's not a loophole, you're not tax free to Portugal, generally speaking. So I hope that answers that question. And again, for those who are joining, I did receive your questions in advance, those that sent in. And if you didn't have a chance to do so, please feel free to type them in the box below, and I'll get to them in the order in which they are received. Second question. Okay, somebody's asking, from a tax point of view, what are the top jurisdictions for nomads who want the first world experience and they're actively running a business? Okay, so that's that's a pretty topical and typical question. So the world is your oyster, the world is there at your feet. We have on our website, if you do a search for nomad visas, it was last updated sometime in January this year. So it probably needs to be updated because this stuff changes so quickly. So we had tracked about 56 nomad visas across the world. So from an immigration point of view, the world, jurisdictions across the world are increasingly becoming aware of the benefits of having a long-term visitor program. So, it's not just about a tourist coming in, somebody's coming in for a weekend, a week or two, but there's some people that want to stay a few months up to a year, or maybe 2 years. So with that in mind, jurisdictions are quite welcoming. I mean, welcoming being one of the pioneers would be the welcome stamp in Barbados, and most recently there's been one in Spain. So, and lots in between. So there's a lot going on in that space. You have a lot to choose from. But everybody has their own perspective, everybody has their own point of view. It's very subjective what is a place that you would enjoy. We do have a package. If you just come to our website, htj.tax, you'd find that we do have some packages to help you decide where in the world that you're gonna go to. But generally speaking, for those who want the first world benefits, because yes, you can enjoy very low cost living in emerging markets, but it comes at a price. Infrastructure is not what it is in a first world jurisdiction, obviously. And you pay, things don't get handled in a quick manner. You have Wi-Fi problems, it's slow, it's always dropping, it's not reliable, especially if you're a remote worker, that's super important. But anyway, generally speaking, and the term first world, of course, is quite subjective. It's not, but let's put aside all those nuances and just speak generally to for our clients. I think the two most popular jurisdictions right now, well, if you're asking from a tax point of view, you remember if you are US exposed, you're going to pay US taxes regardless of where you reside, right? So, right, there's not much you can do about that. So if you are US exposed and you work remotely outside of the US, the main benefit is that Section 911 foreign earned income exclusion, which it moves with inflation, but for 2022, as we're doing 22 returns right now in 2023, it's $112,000. So the first $112,000 plus your standard deduction, plus you get a housing allowance as well. So depending on where you are, that could be 140, maybe 180, $190,000. It's still declared in your tax return, but it won't be subject to taxes. Generally speaking, this is earned income. I'm not talking about passive income. And I'm not talking about self-employed income, which is subject to self-employment tax, but I'm just talking about remote workers who are earning wages from from an employee-employee relationship. That's the huge win right there. That's foreign income exclusion. So if in the mid to high six figures, it is something that is noticeable, right? But once you get into seven figures, it's probably not going to be as meaningful an arrangement. And there are the options that you could explore if you talk to teams like us. So anyway, so from a US point of view, you work abroad, you enjoy that foreign income exclusion, which is a huge benefit for earned income. Now, if you're not US exposed, well, then that's a great win right there, because typically once you sever tax residency with your country of origin and you do so in the appropriate manner, you may be able to break free of their tax net, right? And it has to be done in an appropriate manner, because increasingly jurisdictions are becoming stickier, and that there are these fallback rules. So for the big English speaking countries, so Canada, the UK, Australia, New Zealand, that it's becoming an increasingly important issue. Yes, you may not reside in those countries, but depending on your circumstances and your facts and circumstances, you may be living outside for a period of time, but still you may, because of the fallback rules, you'd still be subject to taxes in those jurisdictions. So you want to have a conversation with your preferred tax advisor about that to make sure that you sever tax residency in the right way, if possible. Having said that, let's assume that you've done it. Then, where do you want to go? If you're US exposed, a popular place to go is, of course, Puerto Rico, because aside from we spoke about the foreign income exclusion, but more importantly, there's some benefits in terms of unearned income, or so-called passive income, and you can enjoy under certain circumstances zero tax on passive income. So it's a huge draw. Other than that, and this will be for Americans and non-Americans alike, I think two of the most popular jurisdictions, at least right now, the flavor of the last few months at least, would be the United Arab Emirates, which, you know, the most popular of which is Dubai. So it's a union of several Emirates. The capital is in Abu Dhabi, but Abu Dhabi is kind of low key. The most boisterous member of the Emirates would be, of course, Dubai. The entertainment hub of the union. It's increasingly popular from an immigration point of view. They are so easy. And it kind of came into its own during COVID when it was, for some period of time, it was the only international city that remained open to everyone. So it kind of really secured its place on the landscape, and it continues to be popular. So we could talk more about that later on, but I think Dubai is really, really popular right now. Some people look at it as the greatest thing ever, but I think it's not suitable for everyone. And whereas it may be a short to medium term, but place to be based, in the long term, it may not be appropriate for everyone either. So, one size can't fit all, but definitely if you're going to consider a tax efficient jurisdiction with first world amenities, you want to consider the Emirates and Dubai in particular. Another place is Spain. So whereas the Emirates is generally speaking now, it's things are becoming quite nuanced now, but generally speaking, the Emirates is tax free, assuming that you're not deriving any income domestically, that you're running your business online, you're working remotely, and your income is derived from outside of the Emirates, is going to be tax free to you into the Emirates. Spain, Spain is, again, it is nuanced. Now, Spain and Europe in general is not typically considered a high tax jurisdiction, but what Spain has done with its nomad visa, as well as a previous regime called the Beckham Law, it's created situations where you can be physically in Spain and you can be physically resident in Spain, but you're not considered tax residents in Spain, even though that's where you are. And that's an amazing draw. It's a limited time, so there's some nuance to it, but typically it won't last more than 5 years. And generally speaking, your income derived outside of Spain would be tax free. And with the nomad visa, so there are two ways of getting it. There's nomad visa as well as the Beckham Law, but I think the nomad visa is quite popular right now. You'd need to demonstrate. There's a laundry list. You can go to various websites. There's a list of what they're looking for. It's brand new, so people are still figuring it out. But generally speaking, you need to pay yourself, or you need to demonstrate that you're earning at least 2,000 euros. But aside from that, everything outside of that will be tax-free, generally speaking. And again, it's quite nuanced, right? So it's really designed for that person, just like the Emirates, someone who derives their income from either as an independent contractor or a remote worker, employer-employee relationship with an entity or with clients outside of Spain, or in the case of the Emirates, outside of the United Arab Emirates. So yeah, Spain and the Emirates would be two jurisdictions for those who want the benefits of that first world experience in a tax efficient manner. It's definitely worth considering, but they're not perfect. So tax just begins the conversation. Obviously, non-tax factors will inspire you as you make your ultimate decision. Okay, just looking down the questions. And again, for those that sent questions, yes, we got them. If you still want to ask questions, please feel free to type in the box below, and we'll get to them in the order in which they are received. So, okay, yeah, somebody asked, so, it's a good, continuance from the previous point of question. So in terms of the United Arab Emirates, yes, there are other advisors in the space who are, super bullish on the Emirates. They think it's the greatest thing ever. And my assessment is more measured. It's not as superlative as other people would make it out to be. I mean, no, at the end of the day, nowhere is perfect. There's no space that is perfect. And every place has its pros and its cons. And that just makes sense. That's just kind of obvious, right? So everywhere has its pros and cons. So, I mean, the Emirates, it is generally speaking, tax-free. Generally speaking, tax-free, depending on your situation. But, of course, everyone is talking about the imposition of a corporate tax at 9% corporate tax, which may draw certain people depending on your situation. So again, generally tax-free, but you'd probably want to consult a tax advisor to make sure, given your unique fact pattern, that it is tax-free. So that's a huge draw. You have the first world benefits. You have that, the affordable luxury, as somebody was telling me. You have incredible living spaces, entertainment spaces, shopping, and it's a great hub because at Emirates, you could basically, you're one flight away from most places in the world that you'd want to visit. So it's a great base. We've seen so many of our clients move there. We picked up so many clients who are there. It's probably our number 2 jurisdiction right now after Singapore. So I'm also resident of, I have my Emirates ID. I've been a resident of the Emirates since top of 2021. So relatively recently, but long enough to know that I enjoy it. And we will be hosting an in-person event at Capital Club in the DIFC in mid-April. So have a look at our website. I think it's on April 11th, so just before the tax deadline. So we're going to be talking taxes to those who are based in the Emirates and they have certain questions. So anyway, huge fan of the Emirates, but it's not perfect. So one of the things that for me is it's an issue is there's no clear pathway to citizenship. So for those who want, just the security and benefits that come from not just being a long-term resident, but by being a permanent resident or a citizen, importantly a citizen, if that's what you're looking for, the Emirates may not be for you. And I've met many people who've been there for decades, and they said, okay, it's kind of awkward that at any point in time they may have to leave, right? Or if their circumstances change. So that security that comes with being a citizen, that's generally not available. There are circumstances for exceptional individuals, but there's no tried and tested program. So that's the first thing, citizenship. Another thing would be banking. Banking is very challenging. Banking is challenging everywhere. So I'm not picking on the Emirates. Banking is challenging everywhere. But in the Emirates in particular, it is, and I get why the Emirates has been, let's see, the target of sometimes fair, but sometimes unfair criticism for being a center for, let's say, nefarious activities, right? So they want to clean up their act. They want to make sure they don't go back on any one of those blacklists or those gray lists. And in order to do that, they need to make sure that the banking rules are as tight as can be to make sure that people are conducting business affairs in a legal and reputable way. So I get why they do it, but it just makes it very difficult. Having said that, at a point in time where we're all sensitive to the stability of banks, if you're Googling and you're looking for rankings of the most stable banks in the world, you're probably not going to see any of the banks, the indigenous banks in the Emirates available on that list. But if you're in Singapore, then definitely the 3 main banks in Singapore, CBC, DBS, UOB, would be in anybody's list of the top banks in the world in terms of stability. They're just easy to deal with and they're rock solid, according to the stats for people who do this sort of ranking. The Emirates, not so much. So there's a banking issue. There's also a confidence issue. Not so long ago, there was an economic crisis in the Emirates, and as a result, they had to be bailed out. But this is in Dubai in particular, I'm talking about. There was an economic crisis, and it had to be bailed out by Abu Dhabi. So for those who've been there long enough, for the newcomers, they have no memory of that. For if you hang around with business people that lived through that time, they will tell you what it's like, and it was kind of, it's really scary. So, I put all that together and to say that money does not like uncertainty, and to a large extent, the things in the Emirates are relatively uncertain. But I mean, there's no certainty anywhere. Black swan events can happen to anyone, any place, anytime. But the Emirates, just generally speaking, is, it's somewhere to proceed with caution in terms of making it the center for where you store your wealth in particular. So just to recap, no pathway to citizenship, banking, uh, recent history of instability, and general uncertainty. Those are the key 3 or 4 reasons why I love the Emirates. I look forward to being back there in a couple of weeks, but I proceed very cautiously in terms of, storing wealth and things of that nature. Hope that answers your question. So moving on to the next question, somebody's asking about Switzerland. I guess you're asking that in light of what's happening. So for those who are watching or listening to the recording of this is, a day or two after the Credit Suisse. So we're doing this on the 21st of March. So this is a couple of days, a day or two after the instability of Credit Suisse, which was the second largest bank in Switzerland, and it's now being taken as part of the bailout package, is being taken over by UBS, which is the largest bank. And in terms of just being completely transparent, I did work for UBS long time ago back in London. So and Switzerland, I'm a huge fan of Switzerland. Whoever asked, it's been around for a long time, and it's been a jurisdiction that's been synonymous with wealth management and with asset protection and stability, generally speaking. But hey, we live in definitely uncertain times. What do I think about Switzerland? I was speaking to a fellow professional who runs a multifamily office in either Geneva or Zurich, I don't remember. This was last week or the week before, and yeah, I think I would definitely mirror his sentiments in that the future for Switzerland as a jurisdiction, I think it's definitely assured. It has, as I said, a long history, and perhaps longer history than most jurisdictions. It's been through lots of highs and lows. It is the natural offshore center, one of them, at least for continental Europe, if not for high net worth families from all over the world, including Asia, Africa, Latin America. So yeah, and with that history comes a measure of comfort and security. So you have a deep and wide network of fiduciaries, of professionals, lawyers, accountants, tax advisors, wealth managers, bankers, who are very familiar with the jurisdiction. So that talent pool is deep, that talent pool is wide. So you have easy access to the best in class in terms of helping you manage your wealth. And if you want to move there, helping you set up. So, but it's not for everyone. It's not Dubai. The entry point is a lot higher than Dubai. So you probably, if I think you can live in Dubai comfortably on low to mid 6 figures. In Switzerland, you're probably going to have more than that to live comfortably, because it is not a low cost jurisdiction. It is not for everyone. But I'm pretty bullish on Switzerland. So I hope that answers your question. Safety, security, history, legacy, great talent pool. Again, for those who are still joining, yes, we have got the questions that you sent in advance, but if you want to ask more questions, time permitting, we have half an hour left. Just feel free to type them in the box below, and we get to them in the order in which they're received. Next question. Okay, somebody's asking about LLCs. you're setting up an LLC in the US. So what are the things that you need to consider, like the basics of LLCs. So again, for those who would not have heard it, we did discuss LLCs, generally speaking, in response to the first question, but the LLC is a unique creature in law in that it is a limited liability company. So it does provide that limited liability protection, but generally speaking, there's no tax benefit. It's not necessarily a tax play. It is more about asset protection, it's more about asset protection. It's more about protecting yourself and your assets as you engage in whatever your trade of business is. It is tax transparent. So if there are a number of you, it'll be treated as a partnership. If there's just one of you, it'll be treated as like a sole proprietorship or sole trader, more familiar terms. But it's really easy to set up. It's fast. The setup is easy. I see people offering it online for $100, $200 and up. So it can be really cheap and fast and easy, but often these people end up in trouble because remember the point of the LLC is limited liability protection. And we've seen all too often people set up an LLC and they use those cookie cutter operating agreements that they just downloaded from a website, or maybe they don't have any agreement at all. And they don't practice, let's say, proper corporate discipline in running their LLC. And as a result, in the event of a dispute with a business partner, with a supplier, with a customer, with an independent contracted employee that you're using, under certain circumstances, that veil of incorporation can be pierced. And that protection that you had counted on would not be available to you. And the dispute means that whoever is attacking you can come after you for your personal assets. So how do you deal with that? You want to make sure you have all your paperwork in place. You want to have all your records in place. So first of all, you want to have a separate bank account. You shouldn't be commingling funds. Secondly, you'd want to make sure you keep proper accounting records. And it's not just you have your spreadsheet or you have it on QuickBooks or Xero or whatever. It's not just that. But for unusual transactions, things of a non-routine nature, you want to make sure that there are proper records for that as well. You may want to have a meeting. And again, it seems kind of silly, especially if it's a single member LLC, but you still would want to make a note that on the 21st of March, 2023, you did have a meeting where you considered the purchase of another MacBook or a Lenovo laptop and a printer, and a decision was made to empower, let's say, Boris to go out and purchase one on behalf of the business and use it for business purposes. And you have that documented, you've signed it, sealed, and then you're fine. So you want to keep notes of transactions of that nature. You want to have annual general meetings, and again, everything documented. Have proper memos and whatever you need to basically demonstrate in the event of a dispute that the business is separate from you, and therefore it's worth the judge or whoever's looking at it should see no reason for allowing whoever is coming after you to see through that veil of incorporation. So again, you want to make sure your banking is done with discipline. You shouldn't be commingling funds. Keep proper accounting records of everything you do, as well as keep proper business records, memos, and you have general meetings and annual general meetings and they need to be properly documented as you run your business. So I hope that helps as you consider using a US LLC. Next question. Okay, someone is asking, I want to start a business. Where should I incorporate? And this is where it gets crazy because sometimes you listen to the promoters online, and obviously you can tell within a couple of seconds that they're being sponsored, which is no problem. Everybody's running a business, everybody's trying to make some money, but they may be sponsored by some jurisdiction. So like, for example, in the Emirates, you have something like maybe 45 or so free trade zones or free zones. How do you know which one is the best for you? Typically, you go online and you'll see someone's video or someone's article basically promoting the free zone that they have a connection with. Not the one that's best for you, but the one that's paying them the highest commission, right? Or similarly, if outside of the Emirates, just anywhere in the world, people would tend to steer in the direction of the jurisdictions that they know, that they're familiar with, or that they have closer relationships, or that they are able to make the most money on. So it's about them, not about you. So with that in mind, you'd probably want to sit with a professional who doesn't think like that, who sees the entire world as available and would understand what your needs are, and to find the right jurisdiction that fits with you and your specific facts and circumstances. So once you hear someone, so for some, there's an old saying that for someone with a hammer, everything looks like a nail, right? So they have this one jurisdiction they love, and no matter what you say, that's what they're going to pitch at you. That's probably, it's probably transparent, right? So you'd want someone who says, let's have a conversation. So, and in that conversation, they'll want to understand your business model. They'll be asking so many questions. What's your business model? Where are you going to be based? Where's your staff going to be based? Do you sell physical products, right? And where those physical products being housed? Where's the warehousing? Where's the distribution center? Is the distribution being handled by dependent agents or independent agents? And even for those who are not doing physical products, services, where are the members of staff or the member of your team going to be? Particularly the key decision makers. Where's your C-suite going to be? Which jurisdictions are they going to sit? Because that has implications, right? Or in terms of products, if you sell SaaS products, software as a service, some jurisdictions have special tax treatment of SaaS. Even though it's not a tangible product, it does trigger certain tax implications. So something for you to consider. Not that it's all about tax, but it's just something to put into the mix as you decide which is the jurisdiction that's best for you. So the point is that no one can just in 2 minutes tell you where's the best jurisdiction for you. You'd need someone that sits with you and just does a whole lot of listening. And then based on your particular facts and circumstances, helps you decide where's the best fit for your entire business situation, right? So I hope that helps. Next question. And again, for those who've just joined, if you sent your questions in advance, yes, I did get it via email, but feel free to type in the box below and we get to them in the order in which they were received. So what I'm going to do now is I'm just going to have a look at some of the other platforms and see whether anyone else has been asking questions, because I don't want to just pick up from one platform only. Okay, cool. All right, just checking. All right, next question from this one. Okay, so, right, so someone is a US person. So again, as we mentioned earlier, if it is that you are a US person by virtue of substantial presence, so you spend a certain amount of time in the US, so that under Section 7701, you should get substantial presence, or the green card test. So you do have a green card, you're a lawful permanent resident of the US, or you're a US citizen. You're subject to tax in your worldwide income, and just by virtue of just hopping on a plane and leaving, that doesn't mean that you've severed tax residency. The only way of severing tax residency is if you surrender your passport, and we help 3 or 4 clients every month surrender a US passport or green card. So it's something that happens, but we help way more enter the US, so, go figure. So surrender that passport properly to a competent authority, surrender that green card. And again, just because your green card expired doesn't mean that you've ceased to be a resident. We get that all the time. Even if your green card expires, you may still be a lawful permanent resident in the US unless you've surrendered it. You've taken credible steps to surrender to a competent authority, right? However, if it is that you triggered tax residence under substantial presence, you spend more than a certain number of days in the US, and the calculation is a bit more complex than most. and that it's not just what's happening in this present year, but there's a look back period of a couple years as well. But once it is that you are outside of the number of days in the US are below the threshold, and you're not you spend certain amount of time outside and you're no longer a resident tax resident in the US, then you're fine. So that's one way you can get out. If you were tax resident and a substantial presence, just leave and stay out, you're fine. Other than that, you need to give up your passport or green card. But regardless, you are tax resident. What is someone is asking, what are the implications of opening a foreign company? And again, some people are under the impression that, hey, you just jump in a plane, you move to Dubai, or you just land in Dubai and you run to the nearest free zone and you open a company, and everything that company does is magically tax-free from day one to the US. Spoiler, no, that's not how it works. Unfortunately, no. There are quite a number of rules that are basically anti-deferral rules, that because if it were the case, everybody would do it, right? Just open a foreign company and you know that company does its thing and it'll be tax-free to the US unless and until there's some sort of distribution, right? So doesn't exactly work that. If it is that you control that company, or you together with other US exposed persons, the US persons as previously defined, you guys combine and you run a company, or you have shares in that company is considered a CFC, or control foreign corp. The US is not the only jurisdiction to have CFC rules. I mean, many developed jurisdictions, developed markets, they have CFC or control foreign corp rules. But from a US point of view, the CFC rules mean that there will be, let's say, de-distributions. Even though the company doesn't pay you whatever, it retains the profit and it doesn't pay it out to you either as a dividend or it doesn't pay it out as a salary or bonus or dividend or whatever. That doesn't mean that you're tax-free. There'll be deemed distributions under something called GILTI, which came into existence in 2017 under the Tax Cut and Jobs Act, and the 2017, I think it was. What else is there? There are also PFIC rules, and this will apply to even companies that are not CFCs as well. You need to have a look and see whether it applies to PFIC rules. And the PFIC rules, I think those came in the 1980s under President Reagan. And then you also have Subpart F, which I think dates back to the 1950s and 1960s, I think it is. So the point is, these are all anti-deferral rules. The IRS, regardless of what people think, and people say they're pretty smart, you know, and the US tax regs and regulations, the rules, the procedures are pretty comprehensive. So it's probably worth having a conversation with a qualified tax advisor before you make certain steps. Chances are, if you think you figured out a loophole, or these loopholes or these hacks that people promote on various places online, just have a look and consider it with someone who's US qualified, just to make sure that the effect is what you're looking for, because again, the consequences for non-compliance can be pretty aggressive. From a US point of view. When it comes to international tax rules with the United States, it's a bit counterintuitive. You think that the emphasis is on revenue collection. Not really. The emphasis is on reporting. And we know that because the penalties for, let's say you don't pay taxes, yes, you may get some underpayment penalties or whatever. And there's interest that would accrue, but the penalties for not reporting foreign bank accounts, for not reporting foreign entities, foreign gifts, and stuff like that, it could be pretty aggressive. From in terms of the civil penalties, it can be pretty draconian, and it could also be criminal penalties as well. You can go to jail. So nobody wants to go to jail. So if it is that you are being advised to set up as a US person to set up a company outside of the US, just make sure that you speak with an advisor, someone with skin in the game, because often you have these advisors pitching structures, but they have no skin in the game. If it is that it doesn't do what they claim it does, you have no recourse because they have no license. They're not, they have no license, they have no professional liability insurance. They're just trying to sell your product, right? And as we mentioned earlier, and we mention all the time, one size does not fit all. You need to get someone who sits and listens to you to understand what works in your unique circumstances. And I hope that helps keep you out of trouble, keep you out of jail, right? Next question, and for those who just joined, yes, we got the questions that you emailed us in advance, but if you want to ask any questions now, feel free to type in the box below. We have time for probably a couple more questions before we round up towards the top of the hour. Somebody's asking, what if I'm not, if a US person and they're not up to date with their US taxes? Well, it really depends on the circumstances, but there are programs that operate. There's a program that is quite popular. There's an amnesty in all but name. It's called the Streamlined Compliance Procedure. So what it does, there's a look back period of 3 years for returns, 3 years to file tax returns for the years for which a due date has already passed. So even though you've been out in Dubai, you've been out wherever for the past 10, 15, 20 years, and you have not filed any returns at all, unfortunately it happens, it's too often. Life gets the better of you and, it just doesn't happen, right? The IRS says, okay, once we haven't started any action against you, you come to us before we come to you, and in return for that, and assuming that the reason for your non-compliance is non-willful, would allow you to come in under the streamlined compliance procedure. What does that mean? So you don't have to go back all 10 or 20 years. You just file the last 3 years, which due date has already passed, which if you're doing it right now, we're in March 2023. The due date for 2022 hasn't yet passed, but for 21, 20, and 19, those have passed. So those are the last 3 years. So you go back, you file those last 3 years for the returns. It's driven, the 3-year period is driven by the statute of limitations. And then you have 6 years for FBARs. FBARs stand for foreign bank account reports. So you need to report your accounts outside of the US, assuming that the maximum aggregate balance exceeds a certain threshold. And plus all the other reporting, the reporting returns, like for gifts or for the foreign companies or everything, and stuff like that. So you package all that, you work with your tax advisors, you draft a letter explaining your non-compliance, and you submit that package to the Streamline team. And once your non-compliance is really deemed to be non-willful, that's it. You pay interest on whatever tax is due, but the good thing is that you legally avoid penalties. And as we mentioned, penalties can be pretty draconian, right? But yeah, so yeah, it can be pretty aggressive. If it is you have a company and you control a company, let's say in Singapore or Dubai, the penalty for not reporting that company annually could be $10,000 per company per year, right? That is, yeah, that and don't think that the IRS does not levy that. They levy it all the time. They are pretty liberal. It happens automatically. So the point is that yes, you want to make sure that you consult with a qualified tax team, and if it is that you do qualify for Streamline, which you'd usually do if your non-compliance is non-willful, then you can submit under that package. If it is that your non-compliance is deemed to be willful, there is the offshore voluntary disclosure, which and the look back period is a bit more. I think it's 6 years for returns and 6 years for the FBARs as well. It used to be 8 years, but it's down to 6 years. And you may ask, okay, so what's the difference between Streamline and the offshore voluntary disclosure? Voluntary disclosure. The reason lies, the difference lies around the concept of willfulness. It's not defined in the tax code. Right? There's nothing in statute. So I think most advisors and lawyers and accountants rely on case law. And case law tells us that if there's an intentional, uh, you intentionally avoided a known legal duty. So there was intent behind it. And you can probably get into that with your advisors, that if there was intent to deliberately avoid or evade paying taxes, and there was a known legal duty, you knew what you were supposed to do and you deliberately didn't do it, then you may need to look at a voluntary disclosure. If it is that your non-compliance is deemed to be non-willful, you go into streamline. So most of our clients get into streamline. For those who get into the voluntary disclosure because they were willful, we definitely work with lawyers on that, because yeah, that is the penalties that around that are much more aggressive. So there are real penalties. With streamlined, there are no penalties, just interest. So we work with lawyers on that. Lawyers lead that one. On the streamlined, lawyers can lead, but most times tax advisors, accountants lead on that. So it really depends on your circumstance. So I hope that helps. If it is that you have not been compliant, you need to catch up on your US taxes. You can reach out to either ourselves or any qualified team of US tax professionals, and they should be happy to talk to you and walk you through that process. Okay, looking back at the questions, and again, if you haven't asked any questions, feel free to type them below, and we could probably do one more. Somebody else is asking, where should I be based? Yeah, this is a variant of the question that was asked before. So where should you be based as a remote worker, as someone who runs their business remotely? It really depends on your facts and circumstance. One size isn't fit all. Beware of anyone or any team advisors that even before they met you, they know the answer, right? You need to move to Dubai or Georgia or Bulgaria. The answer to everything is Bulgaria, or the answer to everything is Georgia. The answer to everything is Dubai. No, it isn't. It depends on your circumstances, right? So for me, so I think that question has been answered before, asked and answered before. For me personally, in Asia, my base has been Singapore for the past 10 years. I've been based in Singapore since October 2013. I think on the 23rd of October 2013, I moved to Singapore. Amazing jurisdiction. It is the infrastructure is above first world. It puts us talking to some of my colleagues in London yesterday, and just the infrastructure in Europe, UK, US, it just pales in comparison to some of the cities in Asia, and Singapore is definitely the front of that path. You get beyond first world amenities and benefits, the ease of doing business. It is safe, it is clean, the rule of law. It is a fantastic place from which you can operate regionally, and that's what we do. So my team, we are a member of Moores Rowland Asia Pacific. So we have over 30 offices in 13 Asian countries. So as far north as Tokyo and Beijing, all the way down to Sydney and Melbourne. So I sit in Singapore, but before COVID anyway. Now things are slowly returning to normal, but we would travel liberally, easily on a weekly basis up and down Asia. So it's a great place to do business throughout Asia. It's tax efficient, world-class banking, everything just works. So I'm a huge fan of Singapore because things just work, but it is increasingly an expensive place to do business. So as a result, a lot of people prefer to those who can't afford it, and that's understandable. Everyone's situation is different, of course. KL, Penang in Malaysia, a lot of people like Bali. I always caution people with Indonesia. We have quite a few live streams that we've done on Bali, and I've partnered with my colleague from Moores Rowland in Indonesia. Moores Rowland in Indonesia is the 5th largest accounting firm in Indonesia. So the head of tax there, Dicky, he does live streams with us, and so many people get Bali wrong, and unfortunately people end up in a bad way when they try to circumvent the rules. They don't pay taxes, they use nominee structures, and it invariably huge risk, and lots of people have been severely hurt financially as a result of taking those risks. So but people do anyway. So I suggest you get advice. Definitely get professional advice if you Indonesia, Philippines, and so on. But yeah, I think Singapore, once you can afford it, is the perfect jurisdiction to do work across Asia. But of course, it depends on your situation. Bangkok, a lot of people like Bangkok as well. Hong Kong is reopening. I hear people moving back to Hong Kong. Really depends on your situation, right? So in the Middle East and Africa, hands down, it's going to be the Emirates. I'm a huge fan of the Emirates. We've spoken about that a lot. Dubai is it's the flavor of the moment. I caution people about just thinking too long term. Proceed with caution anywhere you go. But for right now, there's no real comparison. There's no real competitor to the Emirates for corporate structuring, as well as to live and reside, or to have your base. In Europe, tax wise, I like Spain. I'm not in Spain, but given what's been going on in Spain, I think Spain is hugely attractive. But the ease of doing business and the ease of getting things done, not so much. So old school, I still think London, you have to pay for it. It's not cheap, but sometimes it's worth investing, because it's worth you get a return on your investment, right? So the ease of doing business, banking, infrastructure, easy access to talent, still like London. And so that's my pick for Europe. And in the Americas, I know people like low tax places, like, well, not low tax, but places that are not as diligent in enforcing the tax rules, like Mexico. Colombia used to be a thing. I'm not too sure. Colombia and Costa Rica and Panama used to be a thing. Uruguay, I'm liking Uruguay. I'm actually speaking with some residency experts on getting residency in it. And I'm sorry, I've said Dubai and Uruguay, sorry. Freudian slip. So I'm liking Uruguay. I want to check out Uruguay. I've been speaking to residence experts about Uruguay. I'm hearing good things about Uruguay. But still, the United States. The United States. Like, again, yes, the taxes, yes, there's this, yes, that. But again, access to capital markets, access to talent, first world infrastructure. Like Miami is in the Western Hemisphere, is one of the few cities that you can basically get to anywhere in the Western Hemisphere in a single flight. And just as a great hub for doing business. So just like when you're in London or Dubai or Singapore, it's easy to, especially if you do work internationally, you have clients, you have offices in various jurisdictions like we do, ease of the ease of travel is super important. It becomes convenient, not just for yourself, but for your team members, for important clients. It's so helpful. So I like the US, even though of course you pay a price. And to me, it's not about chasing the lowest tax jurisdiction. It's about being in a place that works for you. Now, having said that, I think that's it. We've come to the end of our hour. Thank you for joining us. We do these live streams more or less every week, but we produce content every day. We have over 2,000 articles on our website, over 1,000 videos on our YouTube channel and on the various podcast platforms. My name is Darren Joseph, and we hope that we have lived up to your expectations in making the sometimes confusing world of international tax and cross-border taxation just a little bit easier to understand and navigate. Otherwise, come and look for us. We're at hcj.tax, and I'll see you next time. Bye-bye.